shares in Barclays Africa have plunged ahead of a critical meeting in London on Tuesday. Now, at that meeting, the London-listed parent company is expected to announce the details of its plans to pull out of Africa. Barclays has about 40,000 staff members spread across 12 countries on this continent. Even though there's no suggestion of job cuts so far, shares in Barclays Africa dropped by as much as 6% today as investors essentially turned away. Angela Coppola is looking at the options for Barclays.
Barclays plc has been evaluating its businesses and specifically sources say its African operations. The bank, however, is tight-lipped ahead of its annual results presentation on 1 March. But there are several scenarios that could play out.
Could simply sell part of their 62% stake that they own in Barclays Africa to 50%. The advantage of that is they still own control and they reduce the stake that they have in Africa. The alternative is to sell the entire stake of 62%.
An issue facing the UK-based bank, if it opts to sell its entire stake, is the local regulator.
They will have to get Reserve Bank approval, and secondly, the Reserve Bank will have to approve of the buyer. This is very important to understand in that central banks globally will only want very strong shareholders for their banks.
And added to that, any potential buyers would be keen on Africa as a medium to long-term play, taking a view that the commodity cycle will soon end.
I think it's unlikely that a player who comes in to replace Barclays would try and reduce what they've got. They would buy it because they like ABSA, they like Africa, they like South Africa, and so they wouldn't want to change anything. In fact, they most probably want to improve it and get more joint ventures and joint transactions going together.
It's all about appetite and whether the potential buyer takes a longer-term view on Africa. On the other hand, of course, Barclays could say we're holding on to the stake because we believe in the African story. I'm Angelo Coppola for CCTV in Johannesburg.
Right then, now Barclays Africa Group has said that any announcement by the parent company would not have an effect on its operations in individual African countries. In fact, CEOs across the board have been at pains to explain that. Today, Barclays Africa's Kenya's unit, for example, has spent the last 48 hours assuring customers it's not shutting down and their accounts are safe. Take a look.
First and foremost, Barclays Bank of Kenya is not shutting down. And this is very important because assertions have been made that we are closing down our operations here in Kenya. Consequently, any decisions concerning the operations of Barclays Bank in Kenya can only be made by Barclays Africa Group Ltd in consultation with other investors who are shareholders in this business.
Right then, we've told you both sides of the story, but let's look at the numbers. They have a story all of their own. It was only in 2014, for example, and Barclays Bank's chairman was describing operations in Africa as, and I'm quoting him here, a longer-term regional growth business with clear competitive advantages, end of quote. Fast forward to 2016 and the bank's board is apparently considering selling off the entire business altogether. Now the final word, as we mentioned earlier, is due on the 1st of March. But to give you a sense of what might be up for sale, if you happen to have a few $1 billion lying around, here's a spread of Barclays' operations across Africa. 12 million clients in 12 different countries. South Africa is their largest operation. We'll get back to that in just a moment. It's among the top 3 banks in some markets, Ghana, Zambia, Botswana among them. And by the end of 2014, these 12 million clients had deposited about £35 billion with the bank. Now, this sounds like a lot of cash, but how do they stack up within the group? Well, the thing is, it's worth pointing out that in terms of the group as a whole, Africa is really just a tiny fraction of group operations. By the end of 2014, nearly 40% of its assets were in the UK, about 22% in continental Europe, roughly a third somewhere in the Americas. Less than 10% was somewhere between Africa and Asia. Between 2012 and 2014, income and pre-tax profits from African operations were also in decline. In fact, the 2 positive metrics from the region were a reduction in the loan loss rate and a rise in adjusted return on equity. Ultimately, however, to understand properly why Barclays tends to speak about Africa with emphasis on the continent's most advanced economy, look no further than the breakdown in client numbers. Of those 12 million clients, 9 million of them are in South Africa. Decline in economic performance in South Africa, therefore, a decline in South Africa, therefore, comes with a decline in earnings of clients over there. And that just can't be offset by the other 3 million clients elsewhere on the continent. Let's dig deep into this story. Sumitra Naidu is live in Johannesburg and Chicha Nobat is live in New York as well. Sumitra, let's start with you. 3 out of 4 clients for Barclays are based in South Africa. Is this sale primarily driven by the fact that Absa just hasn't been doing well in South Africa?
So yes, Rama, when the Barclays Group first started investing in Absa back in 2005, it was one of the largest retail banks in the country, and it currently holds second spot in terms of customer base, as you were saying, with over 9 million customers. However, currency depreciation has hit the business hard. Return on equity last year was 9.3%. It fell short on the 11% target that the group had. In terms of costs, Absa is a very large employer, over 30,000 staff in South Africa alone. Many analysts believe that if the company is looking to re-strategize and streamline, that selling off the African business may just make some sense. Growth in South Africa is under severe pressure and it may take a few years to recover, and the rand has proved that it's one of the most volatile currencies amongst emerging market currencies. And when you look at the rest of the continent, growth figures are just not as fantastic as they were a year or two ago. But the company is also facing huge fines in other parts of the world, in the UK, in the US, for instance. But Africa seems to be the one unit that may just go.
Indeed. Chitra Belli, 2 years ago, as I mentioned earlier, Barclays' chairman describing Africa as a whole as a market with long-term potential. Why a sale now? Where's this faith in the African growth story disappeared to?
Rama, market conditions and, frankly, prioritizing resources and assets elsewhere. Reports say that the Barclays CEO, Jes Staley, views Africa as a costly distraction, especially as the South African rand devalues and the economy slows. Barclays wants to put its assets and resources to work in markets where it can get bang for buck, and so where the return outlook is better in the medium to long term. Experts say more than 80% of Barclays Africa earnings come from South Africa, and the return on equity is relatively strong, so Barclays should invest more. But there is capital benefit to getting rid of Africa. It would help the bank improve its capital ratios, decrease its risk-weighted assets, and potentially speed up dividend plans. Analysts like Citi view that Barclays' stake in Africa is offering long-term option value when it comes to growth and capital flexibility. They would prefer Barclays to keep its stake in Africa with the goal to increasing it over time, but analysts don't view any divestment in Africa as damaging to the bank.
Indeed. Let's come back to you, Sumitra. The rand's performance against the dollar has been repeatedly cited as one of the reasons why Barclays might want to exit. But isn't that in and of itself an indictment of the economic policies we're seeing coming out of South Africa?
Well, yes, there's mixed views on that. Many are saying that the rand is actually the reason for their pullout. But, on the other side, people are saying, no, it's not enough. So the rand has had a very negative impact on earnings. The rand has fallen 30% in the last year. The currency is trading at around 22 some odd against the pound. That's almost double the amount from when Barclays first upped its stake in Absa in 2013. Barclays is expected to lose around £400 million of the £3.8 billion capital that it invested in Absa since 2005. The return is just not there. It's just not performing the way it should be. And of course, because Absa is such a big operation, it is the one that's most likely to go.
Indeed. Final question to you, Chitra. Let's assume, for the sake of argument, that tomorrow Barclays' board does announce, yes, we're putting Africa assets up for sale. Which bank would be interested and even able and willing to raise the billions needed to buy these assets in the current environment?
Rama, there aren't any clear buyers for Barclays' African operations. Banks are increasingly cautious about where they put their money and assets for a few reasons. One, there's global economic uncertainty. 2, there's heightened regulatory requirements causing banks to have more capital requirements and decreased risk, which means getting rid of higher risk assets like in a region like Africa. And 3, choppy earnings from banks in all parts of the world, such as HSBC and Standard Chartered most recently. This leaves many banks with weak earnings and cash flow outlooks. And 4, there's net interest margin compression. So banks are very cautious about going into markets viewed to be uncertain, unpredictable, and higher risk like Africa.
We do leave it there for the time being and see how this plays out in the next 24 hours. Sumitra and I do in Johannesburg, Should to Know But live in New York. Thank you both. Right then, we're still on this Barclays story. Here's Richard Bestick reporting from London on why Barclays would want to shut down or at least leave its African operations after more than a century of profitable business over here.
Barclays said it wouldn't formally announce its plans to move out of Africa until it had published Tuesday its full-year earnings. But analysts are now convinced the world banking giant will leave Africa. It's just a matter of how and when. The reason's twofold: low returns from its operations on the continent and a global plan to rationalise and focus on the profitable areas of its business, largely in the UK here and the United States. Although Barclays has been operating in Africa for more than a century, Barclays Africa as such, which was formerly known as ABSA, was created only 3 years ago. It pulled together businesses in 12 African countries which were either majority owned or 100% Barclays controlled. It has more than 12 million customers. Despite all that, now is not a good time for banks, and analysts question whether Barclays will be able to find a buyer for its 62% share in Barclays Africa. Such uncertainty pressing hard on the African operation's share price, and the Kenyan operation has already been forced to issue assurances to customers that their money is safe. Richard Bestick, CCTV, Barclays Bank, London.